Happy Monday, everybody. I hope you had a great weekend. Something new in Chicago. We actually got some sun. I hope you did too. Last week was another action-packed week, so let's jump right in, talk about last week, and then we'll preview this week as well. As I told you last week, bank news. You never know what's coming. Bank news on Monday was dominated by the fact that First Citizens Bank acquired much of the old Silicon Valley Bank. Now, I say old since the branches opened as First Citizens last week. You never know what's coming. This, along with talk about increasing deposit insurance, brought more buying into the markets as the appearance that contagion was not going to be as bad as feared. I've told you about recency bias, but it was very interesting to see the GFC, or Great Financial Crisis, brought back to us so quickly. I've mentioned to you before, I do not see anything like that happening. This is not at all the same. Feel free to call me to discuss those differences. Selling came into the market late in the day. Push and pull of the algos. The market closed slightly higher. The Dow was up 0.5%. The S&P up less than that, just less than that, and the Nasdaq was down about 0.5%. Tuesday saw the markets gap lower just to give back the slight gain from Monday. Asian stocks got a boost as Alibaba announced that the Amazon of China, as many people call it, will be splitting into 6 groups. Now, I don't usually mention individual stocks, and I'm certainly not Chinese stocks, but this is something interesting to think about. With Amazon and Baba being compared so often, but Baba is much a broader company, but now 6 companies will show for it. Just a thought. Fed had just a thought about that with Amazon, maybe with the way that Baba was handled. Fed head Barr was on Capitol Hill again talking about banking. Add that plus some soft housing data and a resilient consumer confidence, which of course is good news unless you're in the bizarro world like us, and good news is bad news. Stocks ended off their worst levels of the day, but still down a bit. Dow and S&P were down about less than 0.25%. The Nasdaq was down about 0.5%. About face, as they say in the Army. Wednesday brought stocks back to buy, gapping higher at the open. UBS brought back an old CEO. Baba news was still coming out, and even some good earnings and outlooks for Lulu and Micron. Overall, the corporate news is backing up the claims that companies are weathering the high inflation and Fed action pretty well. It's been credited to many, but as the saying goes, we cannot direct the wind, but we can adjust the sails. And it seems like the businesses and the consumers are quite good at adjusting as well. We will need to watch because there is a major debate of whether the inflation numbers are coming down or not. I do find it peculiar that there can be a debate, but as they say, put 2 economists in a room and you'll get 3 opinions. The day ended in the green. The Dow up 1%, the S&P up 1.5%, the Nasdaq up 1.75%. Momentum and inflation news from Spain had stocks on the upside again. On Thursday, that was Spanish CPI. Came in lower than expected. I can't tell you, I know these economies tell a story, but at some point, aren't we just grasping at straws? Maybe it's a 24-hour news cycle, but does Canadian rate cuts and Spanish CPI really tell us the story we need to know? Not so sure. Jobless claims continue to be low, and thus the labor market stays strong. GDP was revised down. Personal consumption, think consumer spending, estimates also came down. Why did this not hurt the market? Remember, the Fed is out to destroy demand. That is how they get inflation down. Fed head Collins said that another rate hike is reasonable before a pause, but pushed back on the notion of cuts later this year. Again, I emphasize the question that is asked so often: why does the market not believe them? The Fed is clear, and the market is ignoring it, betting on rate cuts late in 2023. Why does this differ? Maybe because the Fed is not the best at forecasting. Remember, just in the past few years, transitory inflation, and then a year ago, Fed forecast funds to be about 25 basis points now, but not 5.25, just a quarter. And here we are. I don't know what to expect, but we do have to keep all of this in mind. The big data point that everyone was waiting for arrived on Friday in the PCE. It rose 0.3% versus an expectation of 0.4%, helped by Fed heads Williams' comments. Banks moved up, inflation data, the markets moved up again. Dow was up almost 1.25%, S&P up almost 1.5%, and the Nasdaq was up 1.75%. For the week, all three indices were up almost 3%, and for the month, the Dow was just under 2%, S&P up 3.5%, the Nasdaq up almost 6.75%. A great Q1. After all that's happened, this is why we look longer term and separate the signal from the noise. The Dow was up only about 1/3%, but the S&P was up 7%. The Nasdaq was up 16.75% for the quarter. Now we have to see what Q2 will bring. I told you that my opinion is that we'll continue to see volatility and that the train has not left the station. It was just a few weeks ago that we were staring at a doom. Remember this quarter, we said more Fed tightening, a supposed bank crisis, and more. But here we are, back over 4,100 in the S&P. Yes, it is time to evaluate again. Is your portfolio in the position you want it to be? Are you taking the risk that you're comfortable with? Let's talk about that please, before we re-enter the doom zone. Let's look ahead into this week, and guess what? It is Jobs Week. It will also be the Passover holiday on Thursday and Friday is also Good Friday, market closed. No Friday video, but I will try to release one on Wednesday to get ahead of that. A quick rundown looks like this. A pretty quiet weekend of news was blown out of the water late Sunday when OPEC Plus met and announced a large 1.5 million barrel per day cut in production. This does mean something. First, the price of oil is going back up. I've been telling you about this. Second, because of number one, this does make the Fed's job a little bit harder. Think higher oil prices equal higher transport costs, not to mention your gas fill-up. And finally, it does say a little bit about what OPEC Plus's opinion is on global growth. But I think the last one is the least accurate. They're focused on the price, and they can and will change the supply side often. Oil is up big this morning, and we'll see if it has any effect on the overall markets. Today we'll also start off with PMI, manufacturing side, and motor vehicle sale, all little data points. We'll also start with the Fed head parade. Cook will speak throughout the week. We'll also get Mester and Bullard. Those are the ones I know. Tuesday we'll get the JOLTS report. We'll see the first of the 4 main labor reports. Follow that with the ADP report on Wednesday, the jobless claims on Thursday, and wrap a bow around that, the non-farm payrolls on Friday, and that's a wrap. So, and that is on Friday when the market is closed, we'll get non-farm payrolls. Interesting. So that is another week in review and preview, and I'll be back next week with another Monday market update. I'll try to get a planning video out Wednesday. Remember, IRA deadline is coming quickly. I also want to keep planning for Q2 2023 and beyond. Have a great week, and as Art Cashin says, stay nimble.